I'm also going to record it so that you have it. If you want to go back and rewatch it and well, figure out stuff.
All right, thank you.
All right. So the basics, right? We all know that in we have a 5 wave and a 3 wave, right? And in the 5 wave, right, we have one, right? Then we have
Yeah,
two, we have three, we have four, and then we have five. So let's say this was our low, and then this is the high that price is found, right?
hmm,
The major important rule, right, is let's say one, the impulse have been created. Two, if two is a valid correction, it should never go below one. All right.
yeah,
So
yeah,
two, we could have two. Let me remove this. We could have two. We could have one, right? And then this was the load that was created. And then you could have two come all the way down, right? It could do whatever it wants, right? But as
hmm,
long it does not break, or as long as it does not go below one, that means
yeah,
everything that happens between the high of one and the low of one can be recognized as two, as long as price does not break below or go above.
yeah,
All right. And then for three, we have one, we have two, right? And then we have three, right? So as
hmm,
long as it breaks above one, the whole move becomes three. So we're not only
yeah,
talking about the move from here to here, we are talking about the move from all the way to the low of two to the high of three. That's your whole three. So this whole thing becomes three, and this thing, the or the price that was moving against our trend would be just two, and then from that low of two would be our three. So you could say from here, let's say you see price that is creating a low on two, right? And price might be ready to push higher. You could say, I'm considering this as three, but it's only confirmed when price breaks above one, that you can say, okay, now I've confirmed we are in wave three, so I can expect price to push higher to create the next new high.
correct.
All right. And then from three, we have four. So four can come back all the way to our high. See the high, the area that price broke out of,
Hmm,
the high of one, but price cannot go below. So yes, price could leave a week below here, right? But it cannot close below. The moment it closes below, then that's invalidating four, and the whole trend would just have been a one, two, three, right? And then price reversed. So we could have price leaving a week, but it can't close below because price needs to stay above one for the whole 5 wave impulse to stay valid.
hmm,
All right, so once price rejects four, the high of one, right? That's four being created. From the low, we have five, and that's the last impulse. So the tricky thing with five, right, is yes, it can create a new high, but five can also be a failed five. It can come and just end on the high of three. So sometimes it will reverse from the high of three, or it might just break out just a little bit and not create an actual high. So
yeah,
wave five have two things. You have to consider both things. Sometimes price will just reject off the wave, the high of three, and then start the downtrend, or it will create the actual high, an actual impulse, or it will just give us a small breakout and then pull back inside. So that could be considered five. It's called a failed five, but then you still have your whole wave count. All right.
yeah.
Do you have any questions on that?
No, I'm absolutely clear on this part.
All right. Now This is gold. I'm not sure which pairs that you trade, but we like to trade the same pairs because it
Well,
makes it.
actually, I'm working on the Indian stocks, so I usually don't trade on forex.
All right. I think next time when we do another session, we'll do it on stock so that you can understand a little bit more better. But since we're on gold, we can make an example with gold for today.
Yeah, sure, not an issue.
All right. So let's look at gold, right? And then let's look at the low that price made here. So whilst we're looking at that low, right, we're saying, okay, this was where the trend changed, was price was down, and then now price created a low right here, and then it went all the way up. So if we are counting from that, right,
Mm-hmm.
let's look at let's start from that low, and then we have from here, this is our low, we had one, right? And then with price move sideways, that's 2. So remember, 2 and 4, either they can move down against our trend, or they can move sideways. That's also considered a true. Was price doesn't necessarily have to go all the way down for it to be considered a range or a retracement. As long as it's not moving in the actual trend, it can be seen as a retracement. So this would have been our 2. Then from our 2 we have 3, and then from 3 we have 4. Then from 4, if we do move our chart, we should have 5. Oh, so that was our 5. All right. So do you see what I'm saying? Are you there?
Yeah, yeah.
All right. I move to the chart so that we can see a little better. So we had 1, right? And then we can say we had our 2. And then we can say we had our 3. And then we had our 4. And then this was our 5.
Mm-hmm.
Do you see it?
Yeah.
All right, so this is on a bigger time frame, right? Inside our waves, if you were trading, right, let's say you saw the low, you were right here when price made this low, right? This low right here. So inside our low, we said this was our 1, right? So on our 1, we had 1, we had 2, we had 3, we had 4, and we had 5. So once you calculate 5, right, then that means your 1 is complete, right? So now,
Yeah.
instead of looking for sell positions, you are waiting for 2 to be complete for you to enter your 3. Because if price is going higher, if the trend is saying price is going higher, and then it finishes an impulse, you do not want to enter sell trades, because that's going against the trend. So you can get caught up entering sell trades when price is just trying to go higher. So this is the part where you wait for price to complete the retracement or the correction, and then you enter on the breakout, right? So if price had completed our 1 right here, right? Price had created a high right here, right? That's our high, that's our 1, right? So from 1, we want to see where our 2, where our 3 started from. This was our 2, the range that price did. As you can see, price created a range right here. So this was considered our 2. So from this low, price broke out, and then it made a swing low stop hunt, because people saw the breakout here, right? They bought here, and their stop losses probably would have been below around this area, or even just below our range. So we had a breakout, a stop hunt low, it's a swing low stop hunt, and then we had 3 taking shape. So from here, this whole move was 3, but our 3 came out as a 1, 2, 3 wave. So instead of having a 5 wave, our 3 came out as a 1, 2, 3 wave. That's also very much valid, especially if you're trading on smaller time frames, right? If you see a 1, 2, 3 wave, there's a chance that that's an impulse and it's complete. So you can either have it as a 1 to 5 wave or 1 to 3 wave. In this case, we had a 1, 2, 3 wave, right? So from that high of that 3 made, which is right here, we had 4 making a low right here. As you can see, 4 never went into the range of 1, because that invalidates our setup. The moment 4 goes into the range of 1, that's saying the trend has changed. But in this case, price respected our levels and it made a small breakout, like I mentioned earlier, as our 5, telling us that this whole move is complete. Now, the moment price makes 5, right, it has made a high on 5. That means the trend, we can expect the trend to change. So if we are expecting the trend to change, right, we had price give us an impulse, right?
Yeah.
And then we had a correction and another impulse. So until we know what price is going to do here, we can even say we're now in a bearish trend. So now from here, we can expect price to give us another impulse. So if someone is trading right now, they know that price it made a 1, it made a 2, it made a 3. So right now we should be expecting price to give us a 4. So if we are expecting price to give us a 4, we are now asking our question, we're now asking ourselves a question: where do we expect 4 to correct to, right? If we are
Mm-hmm.
looking for where 4 should correct to, we're looking at the area that price last made a breakout. Now, if you look to your left, you have this area as an important area, right? And then
Mm-hmm.
if you look closer, you have this area. This was our last breakout. As you can see, price made a breakout and it didn't retest. Now, I want you to look at these candles, these wicks, right? These wicks are telling us that this is an area of interest. So if these wicks are telling us this is an area of interest, we can expect our 4 to actually come all the way up to this area before it gives us our 5. So if you understand this right, you are now saying if price has created a low at this area, you put your zone, right? And if price keeps rejecting to this low, if you want to enter buy setups, do not expect the buy setups to go any higher than this area. Price could
Okay.
come up to this area, but I would not expect the buys to go anywhere above this area. If you see price going anywhere above this area or closing above this area, then that's telling you that this is no longer in a downtrend. The trend has reversed. So if the trend has reversed, then you are now looking for buy setups, right? If you are looking for buy setups, then you know, since we had a 5 wave pattern in the uptrend, right? Then this is just a correction. If this is just a correction, we have 1. This would be our A, our B, and our C, right? So if this is our ABC correction, that means this whole move that we just talked about that was going up was our 1, right? And this would be our 2, right? And then we're expecting to see a 3. Is it making sense?
Yes, yes.
Yes. So this is talking about, we're talking about this off the 4-hour time frame. Let's say we go on the daily time frame, right? And then we say we want to see where price is at, or we want to see what the trend is really. If we go on the daily time frame, it looks like it's ranging. If we go on the weekly time frame, price is telling us that price has been in an uptrend for a very long time. So if we know that price has been in an uptrend, right, then we're expecting this down move to be a correction, right?
Yeah.
So if we are expecting this down move to be a correction, and then if we look at our where price is at, we could say maybe price was in an uptrend, right? And then price is now giving us a 1, 2, possibly 3. That would be our A, B, and possibly C. So we're now looking to our left. Where could C end up to? So on our left, C could end up possibly right here. Why do we say right here? It's a level of interest. As you can see from here, price has always been attracted to it. Price has always been attracted to it. Price has always been attracted to it. So this, we can expect it to go all the way to this area right here, right? So once it breaks this area, if it does break, then that's confirming to us that this is our C. So if that would confirm this is our C, we can expect price to reach possibly around here, and the most around this area. So when, if price reaches this area, right, we are watching to see what is it going to do. Is it going to keep going down, or is it going to reject? If it breaks and it keeps on going down, then this is the area that we can say, okay, from here we can expect a proper rejection for price to continue going higher. Because remember, we were in an uptrend, right? And then price
Mhm.
is going lower to give us another push higher, right? So if we are saying, okay, from here we know price might be in a downtrend to create C of the weekly time frame, what can we say about the daily time frame? If we go on the daily time frame, we can say price made an impulse and it created a high that could be our 2, right? So if price made an impulse all the way up to this area, actually price made an impulse, right?
Mhm.
We could even say all the way up to this point, and then this was our 2. Could price possibly be creating a 3 going down? Is it making sense?
Yeah.
Do you understand why we said our 2 should be here instead of here?
Uh,
Because remember,
because it has not broken the high of one, so that is why we have to go down till down.
because you said because it has not broken the high of 1.
Yeah.
Yes, price didn't break the high of 1. That's very correct. The high of 1 is right here, right? And then if we put our low of 1 right here, then this would be 2 and then 3. If we put our low of 1 around this area, right, then let me remove the other lines. Okay, if we put the low of 1 around this area, right, then that would mean this was our impulse, our correction. This would be 3. But if
Three.
this is 3, remember 4 cannot go
Become.
below, cannot go into the area of 1, because this would now be the area of 1. Remember, the high and the low of an impulse, the correction happens in between this area. And if price pushes all the way up here, then this would invalidate the whole downtrend. This would tell us now price is trying to go all the way up. But our weekly time frame is telling us that there's a huge chance that price is in a downtrend. So that's why we're saying, what if this was 1, right, 2, 3
Mhm.
to complete impulse 1, right? And then from here we're saying this could be our low and this could be our high of 1, and everything that's happening in between now from here up to here, it's all 2. So until price breaks this low, that could give us 3. Now the good thing about this setup, right, is if you were to look at your monthly, right, do you know week fills?
No. Mhm.
All right, that's a section for another day. But if you were to look at your monthly, right, This is our monthly right here, right?
Yeah.
Price, if we take this, we can say price created a high, right? And
Yeah.
then we have a low. That's last week's monthly candle.
Mm.
So weeks are very important in the fact that when a wick is created, this whole thing we call it a wick fill because price has to fill this wick before it goes higher or before it does whatever it does. But a wick is also a range, because if we were to look at price, right, from here till here, if you go on the smaller time frames, it's a range that happened
Yeah.
here. From here to here, it's a range that happened, and price likes to reprint everything that it did. So price most likely does a weak fill first before it does anything else. And if we look at our previous monthly candle, this is a doji candle. It is a huge wick. So from here, there were no buys at all. Price has been giving us sell signals for as long as I can remember. And if I look at this candle, right, it's just telling us to sell. And having that price had given us an impulse and a two, we should have been expecting this three from a very long time, like for a very long time. And if we look at the monthly target, this would be our target because price has to retrace, it has to fill the wick. Even if it doesn't fill the wick, it will fill at least 79%. Is it 78? If you're using the Fibonacci, so that means price will come to maybe somewhere around here at least, right? So if price is meant to do that, then that tells us that our analysis is going down. That tells us that the weekly candle is going down. It has already given us an impulse on the higher time frames, and we should be expecting price to go lower. So if we look at the weekly, we're saying this is a strong area, right? And then we
Yeah.
go on our daily time frame. We were saying price gave us 1, 2, 3, right? Price is responding to this, right? So if this is
Yeah.
3, if this is our 3, we can expect a correction for a retest to around this area, especially with the fact that this was a very this is an area of interest. So price is most likely going to come back all the way up before it gives us our 4. I mean, this is our 4 before it gives us our 5. And like we said, 5 could end up here, or it could fill the whole range because this is already a monthly trade. So
Mhm.
us counting the waves, right, is just helping us figure out where to enter. So if we are going to be looking for buys from this low, because price is reacting to this, if we're going to be counting our buys from this, right, we're only expecting price to reach this area of interest. You cannot buy anything above this area because buying anything above this area is invalidating a monthly setup, and monthly setups are very important. So we're saying from here, we would like to see price come here for a retest for it to give us another impulse. So how would you know that price is going to give you another impulse? Look at these candles. We have this candle, we have this candle. So what can you expect? You can expect price to do another range, right? Give us a
Mhm.
fake out, and then
Mm.
price drops, because that's what it did all the time. What did it do? It gave you a range, fake out, price dropped, right? It gave you a range, fake out, price dropped. So what can we expect? Range, fake out, price dropped. So what we can expect, a range, fake out, price dropping. Do you
Okay.
see the formation?
Yes, I do.
All right. I think we should end here for today because I also just gave you a very big trade. But I will send you the link for the video so that you can rewatch it and you can go through and see if you have any questions or things that you're not understanding, and then you can just ask me.
Yeah, sure, I'll do that.
All right. That's all. I hope you enjoy the rest of your day.
Thank you. Thank you so much.